Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market and using some dark lighting as I shattered my light. I haven't replaced it yet. But we're going to look at SPY here, and I got to admit that SPY faked me out in terms of not expecting this dip to get bought like this. Fortunately, I've been sticking to my rule of thumb, which is do not play bearish against this market as long as we're in a daily uptrend. So I watched the big pullback today, but was not. There were multiple times where I wanted to make a bearish entry. So SPY on the dump, this 5-minute time frame and V-shaped recovery, I wanted to make a bearish entry looking for a 5-minute lower high here. Didn't do it because it was against my concrete rule. Wanted to look for an hourly lower high to be set up here. Didn't do it. So that concrete rule saved me multiple times from making losing trades, and I'm going to stick with that for now. We did see a couple of the criteria that we were looking for weakness in the market. The first being weak tech sector, thanks to Google bearish earnings reaction. The second was oil topping out with its lower high on the daily. And the third was weakness in the healthcare sector. That being said, as we're going to see in just a moment, the healthcare sector held support by 1 penny and has not formed its top just yet. So we have a complete recovery by the bulls. Apple had a bullish reaction to earnings after hours, and the S&P 500 was up at all-time highs after hours. You can see we're pushing 295. Extremely strong in the markets. FOMC tomorrow, 2 p.m. Eastern. That's the only near-term catalyst to throw off these bulls. And we're going to be looking at our daily higher low now of 291.92 to try and keep the bulls in full control. Checking in on IWM. So IWM, we're looking for a higher low compared to 155.47. We need an hourly trend change to be confident that our higher low has been set. And we did get a little higher low and continuation right at the end of the day. So we'll call that likely our daily higher low at 156.96. Resistance is 159.61. QQQ broke a support of 188.59, but just barely, not significant in any way. And again, the bulls recovered. And here after hours, with what Apple is doing, we're up at 190.77, which is a lot higher than where we closed. So looking back up at the all-time high of 191.32 as the next resistance level. Got a new kind of bird right outside my window distracting me. We'll have to check them out in a minute. Financial sector. So still extremely strong. Daily inside bar. That tells us the hourly time frame is a tightening range. We've got our high of 28.13, low of 27.78. If we can't break 28.13 tomorrow, we're going to be looking for, and it's probably more clear on the 4-hour, a 4-hour equilibrium. So if we cannot break 28.13, we're looking for that higher low, keeping in mind that the FOMC biggest reaction is going to be in the financial sector, gold, and the dollar. So pretty much that reaction is going to determine whether we see a bull break to continuation or whether we lose this higher low and start to see daily consolidation. And we'll just be looking for a daily higher low in the financial sector. Biotech sector has been showing us for 3 days in a row now that it is weaker than the healthcare sector. We lost that daily higher low. The weekly chart is a potential bear flag. We look at the financial sector, it's still strong. It closed up at the high of this bounce. So big difference now as they are breaking correlation with each other. We're still looking for the financial sector to give us a lower high. The healthcare sector to give us a lower high compared to 91.03. I'm so used to only talking about the tech sector and the financial sector that now that I'm throwing the healthcare sector into the mix, my tongue has still not gotten used to it. But we're looking for the lower high. Low of yesterday's support was 88.47. We held it by 1 penny, and then we broke to the high of the day. So a nice hold of support, but that's our clear level. If we break that double bottom, that tells us our top is set on the daily time frame on this bounce, and then we're going to look for a daily higher low if that level does break. So it looked like the VIX was going to get a breakout today. And of course, a big upper wick. We were watching the falling wedge pattern. Look at that rejection. 2 out of the last 4 days. Still keeping an eye on this pattern because we're certainly still within it at this point. That's where I would be drawing it. We'll see if we drop down towards the support line, but multiple rejections from this resistance line Again, just ensuring that no candlesticks are closing above, and that's the way I would draw that trend line, and still within that pattern. Oil today. So oil is looking like a daily lower high has been set. Now remember, we lost the daily uptrend, but in order to confirm the daily downtrend, we need the lower high and lower low. So the key support is 62.26. Bulls really want to hold that level to prevent from confirming the daily downtrend, but we have significantly pulled back from that top. And here's the hourly with an hourly bounce and potentially fading back down. The hourly chart's in equilibrium. Just looks a little odd here. 63.29 is support. Resistance is 64.11. And the bulls are trying to hold 63.29. And actually, it is a double bottom to the penny right now in extended hours. So a tightening hourly time frame. If it breaks bearish, odds of a bear flag on the daily are likely. If it breaks bullish, then the bulls have a chance at fending that off. Can you hear it? Come on, bird experts. What is it? I think it's a little gray dude. We'll figure it out. Natural gas. So natural gas on the daily. We have lost the higher low everyday pattern. Bulls are hoping it's just a little brief consolidation period. Most important support level for me is 2515. And if we keep that level intact, then the bulls are just fine overall. That resistance is up at 2582. And bulls want to see continuation. I would say a loss of the 4-hour uptrend, which I don't consider having happened yet. But if that happens, then our daily lower high is set, and we have to pull back and form that higher low, and then try and change this daily trend. If we don't break the 4-hour uptrend, then we haven't topped out on this bounce yet on natural gas. So the FOMC is coming up. That's going to give us some short-term catalyst for some momentum tomorrow. It's a 98% chance that we're not expecting any changes. So it will likely be the language of looking forward into the future that's going to see these markets react. And if we do lose daily uptrends on most of the instruments we're tracking here, we're just going to be looking for weekly higher lows to form, but still in daily uptrends, which means I'm not looking bearish and not making bearish entries against this market until we see the loss of the daily uptrend. Don't need to nail tops and bottoms. All we're looking to do is grab the middle meat of these trades, and I am fine waiting for some kind of confirmation before looking in the other direction. Until then, I'm still trading the MJ sector, which has had a lot of opportunity this spring. Appreciate you watching. Do some good things out there. We'll end it here with some old-time farm video from Nerdbird and the goats, and we'll see you tomorrow. What's going on, Nerdbird? Hey.